Joining me now is Joanne Tsatsa, who is Client Relationship Manager at Cloud Atlas Investing. Joanne, welcome to you.
Thank you very much.
It struck me when I saw that you were coming in that we haven't talked about African markets much, Mark.
No,
and
the
Brexit issue. We've talked a lot about the US, the pound and so on, and our market. And of course there was a US holiday on Monday, which we talked about. Apparently there have been public holidays in Africa, and they've, to some extent, escaped a natural fallout from the Brexit. So where are those African markets in terms of the fallout?
Okay, so the global markets have been receiving a lot of pressure due to the macroeconomic factors. So we will look at the African markets in Nigeria. So you'll realize that the oil prices have gone down due to the increased oil production. And then you'll see that in the Egyptian markets, they are a little more sensitive to the oil prices. So you will see a rally last week in the markets, but then you will see that in the future they will correct themselves. And then if you look in the East, I'd say that the East is booming right now. Kenya is set to raise a $200 million bond. So if we see that foreign investors are willing to oversubscribe on this bond, then we can see that there is an increased interest in investing in Africa. And another oil generating company is also set to raise $1 billion for infrastructure projects.
This is a lot of money to raise at a time when the oil price is so low.
Yes, but I really feel that this is a good time to pump money into Africa, since the currencies are down at the moment. So it is inexpensive to invest in it.
These markets differ throughout Africa, but they're not investable markets. Many would call them frontier markets, without a broad spread of companies, nor the trading liquidity that people like. So it must be difficult to tap into some of these markets.
Yes, it is. So you find that with South Africa, it is very liquid. So in times of global turmoil, South Africa's market will drop, whereas the African markets aren't as accessible or as liquid as South Africa. So the African lion sleeps when all the other markets are falling. So even though it isn't as accessible as South Africa, I'd say that it is a safe haven at the moment to invest.
What has the effect, and what is the effect likely to be with the Brexit issue? Because a lot of the countries in Africa are historically, like South Africa, trading partners with Europe, with Britain in particular, Francophone Africa, of course, with France. So there's a lot of trade going on. In fact, to the extent that people say Africa should trade more with itself and not maintain those old colonial relationships. But what kind of effect is expected here on, if not the markets, as Mark says, some of these are illiquid, they're difficult to get into, on the economies?
I'd say that the economies right now are a little unstable. So you'll find that in Zimbabwe right now there's a shutdown for everything. So with the uncertainty all over Africa, I'd say that you can invest in an ETF that has a diversified risk at the moment. It's just so that you can make sure that you don't lose out on a lot of returns.
Nigeria has been a problem, of course, with the oil price going down so low. Yes. The other problem is that South African companies, Mark, have there's been an issue about getting money out. I mean, Tiger Brands was one that was affected. It's happened in Angola and in Nigeria. What is the situation there? And I think the change of approach to the Naira in Nigeria did help that to some extent. But no one's going to invest if you can't be sure of repatriating your profits.
True. So the governments in Africa can wake up and decide that they are going to clamp down on capital. So right now, at the moment, we can inject, but then you shouldn't go in with a short-term goal. So if you are investing in Africa, I'd really urge you to look in the long term rather than the short term until everything stabilizes after Brexit.
Do you look at these markets at all, Mark?
Only at a tangent. I think what's quite interesting is that private equity has been increasingly getting involved in a number of African countries. Through greenfields projects, sometimes brownfields projects. There aren't a lot of assets to buy. And it's quite interesting that from a mobilization of capital point of view, I think in in some respects, you're almost looking at identifying greenfields, and in partnership with government, Nampak's a good example of a company that's done that, and that possibly will be the formation of rather more sophisticated and larger markets in decades to come.
In my opinion, I'd say that there is a commodity rush. So in South Africa, everyone is rushing to buy gold. The queues literally are going around the corner to buy gold. And then in Botswana, precious metals are selling. And Zambia's markets were up 1% daily due to the copper exports. So I think things are looking up due to the commodities.
Good. That is Joanne Tsatsa, Client Relationship Manager at Cloud Atlas Investing. Thanks to her for joining us.